In my last video, I was able to use these 4 steps to show you how you can be able to enter a trade in the market. And I was also able to categorize these 4 steps into two. That the first category is simply the category that tells us where price is going to. And second category is simply the category that tells us how we can be able to join price to where price is going to. Now in today's video, I'm going to be applying these 4 steps on the chart using a live trade example. But before going into that, if you're seeing me for the very first time, my name is Divine and I'm a Forex trader. What I basically do on this channel is document how I trade and as well show you the mindset behind my strategy. If you want to be seeing content like this, I want you to smash the subscribe button, like this video and drop a comment. I'll be right back. For me to show you this live example, I'm going to be using GPUSD to show you live example on how you can be able to apply those 4 steps that I explained earlier on. Now the first step is to simply understand direction of where price is going to and the key levels. And for us to do that, we want to simply head to the daily time frame and see what price is doing on the daily time frame. Now for us to see where price is going to, we want to simply use support and resistance to identify where the support is and where the resistance is. In this case here, if we are to draw the support level, we will see that this place is simply a point of support. And if we are to draw the resistance, we would see that here is simply a resistance level. Now with this resistance, we can tell where price is going to. We can clearly see that price broke below a support level and price is going to the downside. That means price is going to the what? Downside. We are looking for sells. But for us to know where we're going to sell from, we want to simply identify the key levels and most importantly, use the key levels to move to the next step. But before we move to the next step, let's identify the key level. Here is simply a key level. Here is a key level. And here is also a key level. Now in this particular pair, we're able to identify 3 key levels. And having identified these key levels, we're going to go to the second step, which is to go to the 4 hours time frame and identify market structure and supply or demand zones on the 4 hours time frame. Now on the 4 hours time frame, we are only paying attention to these key levels on how price behaved at the key levels. For example, this is the recent resistance key level and this is the recent support key level. Our interest now is to simply understand how price moved from here to the current place where price is. And if you look closely, you see that price simply gave us a high, a low, a high, a low, a high, and this low here, and this low give us this high, and this high give us this particular low here, meaning price is giving us lower lows and lower highs. Price in a downtrend. Now having this information now, we want to simply understand where supply zone is because price is in a downtrend. And if price is in downtrend, we want to simply identify supply zones. In this case here, this point is simply a point of supply, right? All of these points here is simply our supply zone. Why? Because price gave us a drop, this base, and this drop. That is the second step. Now the third step now is simply refine the supply zone to become a point of interest and identify the point where liquidity is. And for us to do that, we want to simply go to the 1 hour time frame and refine this to become a point of interest. And one of the ways to refine a supply zone to become a point of interest is by simply representing those full zone with a specific candlestick. That means you want to use a specific candlestick to represent this whole box here. And most times it can be a pin bar, dodgy candlestick, and all of those candlesticks that we taught in E1. right? Now, see one in beginners class. Now, for example, this place is simply going to be our what? Our point of interest, right? Because we are using this dodgy stick that appeared here to represent these full zones that is a supply zone, right? Now, having identified this point of interest now, what I want to simply do now is to identify where liquidity is and be able to use liquidity to know if this place is going to hold or is not going to hold. And in this case here, we cannot clearly see any liquidity at this point here up until price simply get to this level. And with the way price move from this place, we're going to know what price is going to do next. But let's go to the 15 minutes time frame and be able to see if we can see any liquidity on the 15 minutes time frame. Now, on the 15 minutes time frame, if you look close at this point here, we can only see clearly that this place is simply acting as a strong point of interest. That means there's every tendency that price is basically going to react from this particular zone if price gets to this point here. And we want to simply see price induce liquidity, right? That means what we want to simply wait for now is to simply see how price is simply going to take out all the liquidity at this place, and then price give us a reason to sell. And where is the liquidity point? This point where price gave us a three drive pattern is simply refers as a liquidity point. This first move here, second move here, and this third move that caused this low here. Here is simply going to be our liquidity point. That if price comes to this point, we have assumed that price have taken out all the liquidity, and most likely we're going to look for a sell opportunity if price definitely come to this place. And our entry model is going to be that we'll have to patiently wait and look for a short from this level here. Our stop loss is going to be above this swing high here, right? That means our stop loss is going to be here, and our entry is going to be at this point here, and most likely we are going to target this particular point here as our take profit. Now, because price did not give us a 1 hour liquidity, we are going to wait for confirmation before we execute this trade. And what we want to simply wait for is to simply see how price is going to react at this point here. That means we are not going to aggressively enter trade from this place. We are going to wait for price to give us confirmation first before we can simply sell from this level. And one of the confirmation we're going to look for is to simply wait for a change of character. And for us to be able to identify a change of character, we want to simply understand how price is moving from this level here, right? Now, two things can happen. Is that price come to this level here and feel this level and start going to the upside, or price simply get to this level and sell. But for us to know if price is going to hold this level, if price open tomorrow being Monday, we want to simply see price continue heading to the upside and probably react from this place here. But if price open tomorrow and price sells to the downside, that means there's chances that this place is not going to hold, right? That means as price is going to this upside here, price is also inducing liquidity. That means there's liquidity that price is building up from this particular low here to this point here. There's trend line liquidity at this point. That for us to know if price is going to hold at this place, we want to see price continue this movement to the upside. But if price is not going to hold at this point here, if price open tomorrow being Monday, price is likely going to sell to the downside, taking out general liquidity, and then continue to the upside and fill the zone here. Now, most times this is not always guaranteed, but we want to always apply what they call risk management for us to know or probably be on the safer side, because nothing in this game is guaranteed. We're not going to rely on risk management plan for us to have or make money from this particular setup. But the whole entry is this, that we want to simply wait for price to simply buy to this level here, and then we'll look for a sell to the downside. Now, in my next video, I'm going to show you how to apply a proper risk management to any setup that you get. That means I'm going to be showing you how you can be able to apply the correct risk management that will enable you make money from this particular setup. You know, most times you can have the analysis correct, you can do everything correctly, but because you don't understand risk management, you're probably not going to make money from it. So in my next video, I'm going to probably break down how you can be able to use your stop loss, your take profit, your risk to reward, and most importantly, how much you want to lose to be able to maximize your setups. That'll be all for this video. I will see you on the next one. Peace.